Good afternoon and good morning, everyone. Thank you for joining me. My name is Scott Macmillan. I'm the Managing Director of Invictus Energy Limited. Our ASX ticker is IVZ, and we're also listed on the OTCQB IVCTF. Today's webinar will really be about our forward plan coming up in our Cabora Bassa project in Zimbabwe, and talking a little bit about the Mukuyu 1 results, but also then with what's coming up for Mukuyu 2 and the infill seismic campaign that we'll be undertaking to mature some additional leads. So for those of you who don't know much about Invictus, I'll just provide a quick recap before we get into further details. We have our primary project in Zimbabwe in the Cabora Bassa Basin. We have a basin master position, 360,000 hectares, which covers the entire conventional oil and gas fairway within the basin. We have two major play types. Multiple drill-ready targets. We've just completed our first successful basin opening well, Mukuyu 1, which was a rank wildcat, where we've identified up to 13 gas condensate zones. That's been interpreted from wireline logs, and also, very encouraging shows, gas and fluorescence, which has been observed whilst we were drilling. The Mukuyu prospect is one of the largest conventional oil and gas projects in onshore Africa and defined by a very high quality data set. We've got an additional play, the basin margin play, which is analogous to the East African Rift string of pearls play. And we'll take you into some comparisons there with one of the successful basins that's been opened up there in the Lokichar in Kenya. Additionally, we've got a very nice carbon offset project, which will see us become the first cradle to grave carbon neutral oil and gas project and company, we believe, in the world. And that's going to become a very, very big business in its own right. We've got in the future from, on success, we've got the ability to monetize large amounts of gas in Zimbabwe, but also wider in the region. And that we won't be touching much on today. If you go to some of our previous webinars, there's very detailed briefs on what the market consists of. This webinar is really just touching on Mukuyu 1 and upcoming Mukuyu 2 and infill seismic projects. We've now also strengthened our board. We've had the addition of a non-executive chairman, John Bentley, very experienced and seasoned hand in the African oil and gas sector, firstly leading the spin-out of Engen's upstream business, Energy Africa, which was a $100 million IPO in 1996 that had assets all across the continent and built up to a sizable business with production in, I think, roughly 6 countries. So John spearheaded that, and ultimately that company was taken over by Tullow Oil and has formed their modern-day African portfolio. He's also been involved in Wentworth Resources, onshore gas producer in Tanzania, Caracol, who were bought out by Chad in Glencore, in Chad by Glencore, Ferro Petroleum bought by DNO, and then most recently at Africa Energy, where he was present and on the board when Total, their joint venture partners and operator, discovered the Leopard and Brulpadda big offshore multi-TCF discovery. So John's got a great history. We're very, very lucky to have someone of his caliber and capability on the board, and had a very good trip out to Zimbabwe, showing him and Robin Sutherland, who's currently in Australia, out here to lead our technical team with some of the analysis that's going on for the Mukuyu 1 results, and also feeding that into Mukuyu 2. So we've got a couple of subsurface workshops with our team, and also introducing him to some of our key shareholders and stakeholders over in Australia. So Robin's currently in the country and getting settled into with our technical team and bringing his tremendous expertise. So Robin's background was also at Energy Africa, and worked alongside John, where Energy Africa built up their portfolio on the continent. He ended up staying with through the Tullow transaction, and was one of their rainmakers in the exploration group, who was leading the teams that made some of Africa's very significant discoveries on the continent, the Jubilee field, as well as the TEN complex in Ghana, opening up the Albertine Graben in Uganda, and also the Lokichar Basin in Kenya. So Robin's expertise from an exploration point of view, fantastic addition to the company and the board, and we're very, very pleased to have him and his input now leading our team. Briefly on my background, I'm a reservoir engineer by background, spent time in Woodside and most recently AWE. So worked on both Africa and Australian assets, and most recently at the White Sea Gas Project. That's Perth Basin's receiving a lot of attention at the moment because of the fantastic discoveries and a lot of M&A action going on there as well. And we see a similar sort of pathway for this, where a lot of fields have been discovered once the play opening White Sea discovery was made, and that has led to multiple successful follow-ons. The Perth Basin, though, is held by a number of different companies and a number of different JVs, whereas we control the entire basin. So we've locked up the running room, and we see that playing hugely in our favour in the future. Joe Matizwa, our deputy chairman, very experienced businessman in Zimbabwe, led the largest listed corporation there, Delta. He's a member of the Presidential Advisory Council and is the chairman of one of our largest shareholders, Macmillan Capital, who've been a fantastic local shareholder and supporter of us. And then to round out the team, Gap Chiappini and Barry Meikle, our non-exec and country manager. So we've got a very experienced team, both from an oil and gas perspective, but also a lot of Zimbabwean experience to help guide us through this project. So a quick recap of what the exploration portfolio looks like. So as I mentioned, we have got a combination of permits, Special Grant 4571, EPO 1848 and EPO 1849. And combined, that is 360,000 hectares. And this encompasses the entire conventional play fairway within the Cabora Bassa Basin. We've got 13 mapped prospects and leads, and 6 drill-ready targets at this stage. And the seismic will be, the infill seismic CB23 survey will be focusing on maturing these central fairway leads, where it's a long trend from Mukuyu, this basement height trend here that you can see in these warmer colors, where we see a lot of very interesting features on the existing seismic, and looking to mature those into some additional drillable prospects now that we've got a proven play fairway from Mukuyu. And then additionally, we've got this string of pearls play, which looks very similar to the East African Rift discoveries, and I'll take you through that very, very shortly. So very, very big in terms of its size, 20 TCF and 845 million barrels of condensate from Mukuyu. We've got some additional inventory to come from this, which will be worked up post the seismic for these other central fairway leads. And then in the basin margin, 1.2 billion barrels of oil equivalent, barrels if we're talking oil. So very, very material portfolio that we have, and for a company our size to control the basin, have this much prospect and lead inventory is something that's quite rare. Mukuyu 1. So the Mukuyu 1 result, a very, very good result. From a geological perspective, we have successfully proven a working hydrocarbon system within the Cabora Bassa Basin. We have established reservoir, seal, source, and a trap, and not in one zone, but in multiple zones. So we've got 11 gas condensate pay zones over a gross 225-meter interval in the upper Angwa. That excludes the deeper section where we deepen the well in here, and we couldn't log it with wireline logs. We've also got additional. We released some numbers for the Pebbly Arcos, but those will be revisited now that we're starting to get some core data back. And that Pebbly Arcos looks very, very interesting. We were hampered in our ability to formally declare a discovery because we couldn't capture a fluid sample and retrieve it to surface. And that's been the combination of the overbalanced drilling conditions and mud chemistry, and then also full failures that let us down at a very inopportune time. So that has been very disappointing. There's no getting around that, but we are certainly better set up for Mukuyu 2, and we've now know what we're dealing with from a subsurface perspective, from a drilling conditions perspective, and going in now to Mukuyu 2, we know what we're going to encounter, and taking all the measures necessary to ensure that we can deliver what our shareholders expect in terms of a result. So I'll come into the strategy of that in a second, but some of the other interesting observations from Mukuyu 1, we've got multiple zones that we've encountered. So we're not dealing with just one zone or two zones that's sort of common. We have got alternating cycles of seal, source, and reservoir in the upper Angwa. The source in the upper Angwa is very, very rich and prolific. It looks like we've got a lot of it around. We've got multiple source intervals. The basin modeling and the charge history is going to be a complicated one for our team to work out, because there's multiple source rocks, there's multiple charge histories over a period of time. But that is a good problem to have, because it means you've got lots of source rock around. It's migrating not only vertically from where it's being generated in situ in present day, but it's also migrating laterally into the structure. And Mukuyu is a huge fetch area. It's 200 square kilometers, this closure, and it does it basically just funnel everything up into the structure. So the source rock has now been proven. That's a big tick in the box. I'll come to all of those in a second. I think also, just getting back to the drilling conditions, we still had gas shows 135 times above background, despite the 2,500 psi pressure overbalance. So if you imagine overbalance as a force that's being applied to your reservoir, 2,500 psi, is roughly half a four-wheel drive being applied to a 1 square inch area. So we did ourselves no favors with the drilling conditions, but that was necessity going into a basin that was undrilled with an unknown pore pressure regime. So the bottom line is that and I think where the market has missed this result is it's been treated as a geological failure, an issue with the rocks and the prospectivity, whereas that is far from the case. This is a working hydrocarbon system. We've got gas that we've got identified and characterized from the very good wine unlock data that we got, and we need some calibration of that from the core, which is on its way, and also fluids data would have helped. So we've held back in releasing net numbers, because that needs some refinement. We don't want to underplay it, and we don't want to overplay it and have to change the numbers. So once we get this data back, we'll be able to provide a further update. So rather than getting back to my earlier point, the market's treated this as a geological issue and not an operational setback that we had with a combination of the drilling conditions and the tool failures. So that's a very important distinction. So going into drilling Mukuyu 1, pre-drill, we were faced with, statistically speaking, frontier expression's a very tough game. Roughly 5 to 10% chance of success. We've beaten those odds. So now, sitting where we are from a market cap and a share price perspective, we're trading at levels below where we were pre-drill for Mukuyu 1, where we didn't know if these elements were present and whether the petroleum system actually worked in the basin. So that is frustrating, but it's our job now to articulate that and show people why this is a very good investment heading into Mukuyu 2, because of the majority of the risk from a geological perspective has been taken off the table. It's not irreducible. There's still risk associated with Mukuyu 2, but we're certainly in a much better position than we were going into the first well. And now we've got the data that we've gathered from the drilling, and that will also help us design the well better and optimize the drilling fluid design, the well construction, and know what drilling conditions we're going to encounter. So we're in a much better position going into Mukuyu 2. We've had a lot of questions on the sidewall core data and why it's taken so long. So the sidewall cores are in the lab. They've been getting cleaned. We've had some initial analysis come back on some formation damage analysis that we've had undertaken. And as I mentioned, from the heavy overbalance conditions that we drilled with, that has impacted the rocks. And that's not unexpected given how overbalanced we were. So that that work is going to be will allow us to quantify what sort of damage has been done. There's still some further work to be done, but the early signs is that the rocks are fine, but we can certainly improve our drilling conditions, and that'll help us ultimately achieve our goal in Mukuyu 2 of obtaining a fluid sample and being able to declare a discovery. The other important thing is the valid formation pressure test that we got in the Pebbly Arcos and the Upper Angua, which are quite substantially above a normal pressured aquifer gradient, which indicates a potentially quite significant gas column in some of these formations. So when we come to Mukuyu 2, what we'll be looking to do is correlate across those zones, and if we are sitting on the same pressure gradient, then that does provide us with a huge amount of upside from a gas, whether it's a continuous gas column or separate pools, with 13 of these zones so far intersected. That does open it up very, very substantially. I think probably also worth mentioning is that going into a basin for the first time, it's not uncommon to have these issues. Casting back to the Perth Basin, Senecio 3, which was the play opening discovery for the Whitesea gas field, we encountered similar issues there. So with Senecio 3, sticky hole conditions, inability to get a number of formation pressure pretests, which meant that quantifying hydrocarbon gradients and column heights was very difficult. It couldn't be done because you need a certain minimum number of points. Couldn't obtain a fluid sample either in Senecio 3. That was set up to test and appraise a tight gas field above it. So the suspension of that and subsequent well test, which flowed gas to surface, enabling them to declare a discovery. We weren't in as good a position to suspend this well. We'd had issues with the cement performance, and we're concerned that even if we did suspend it, that the cement job we achieved wouldn't be good enough to provide us with a valid flow test. There may have been some thief zones over such a substantial interval that we had 1,500 meters of open hole to get cement all the way behind. We saw it as a significant risk, and by the time we needed to make that decision, I think the decision was we needed to stop and gather everyone together and analyze the results that we'd had so far, so that we could come back with Mukuyu 2 and get it done properly. And Ngamia 1, we'll go through that story in a second. Similar issue, opening that play up with a lot of the drilling challenges that they face: swelling clays, sticky hole, inability to get samples. This is not a unique problem that we've had, and it's all part and parcel of opening up a new basin and understanding what the drilling conditions are like and how to best drill the wells and drill the formations that you're going to encounter, so that you can go ahead and get the data set that you need and fluid samples that you need. So finally, on Mukuyu 1, 4 elements that we were looking for: seal. I think our primary risk going into this was seal. There was concern that this basin was very sandy and there was no seal around, and that even if we did have seal, because of the significant faulting, that it would have leaked, and the hydrocarbons would have leaked out over the period, even if they had been charged. That's well and truly been put to bed. So seal is not really much of a concern for us. Going further, we've seen some very thick and regional scale sealing units in this basin, which have provided us comfort that that's no longer a concern. The trap stands out like the proverbial. You can see it on seismic and in our seismic sections, and that's always been our lowest risk. Reservoir, we've got some very good reservoir units in the primary Upper Angua target, up to 15% porosity, 20% of the Pebbly Arcos, and as I mentioned, that looks like a formation that has got some high potential. We've got 60 or 70 meter amalgamated channels within the upper Pebbly Arcos, and 20 to 30 meter amalgamated channels in the lower Pebbly Arcos, and these are the areas that we took those big losses in when we were drilling, and again did ourselves no favors with the drilling conditions. The reservoir, when the cuttings came to surface, we didn't see any fluorescence from the cuttings, but now that the sidewall cores that we cut have gone to the lab, we can see the fluorescence in the cores in the reservoir section, and the pressure measurements. At first, we were trying to make sense of them, and now it's looking. We've had a chance to rework the log interpretation, and now something that we're quite excited, and Robin in particular has been been chasing down now, and we're looking at the Pebbly arcos in a lot more detail. The analysis of the sidewall cores is in progress. The cleaning is finished, so that the porosity and permeability measurements will be taking place very shortly, and that round of results we'll be able to report reasonably soon. And we've got some formation damage as well to quantify out of that as well with those measurements. So we've got some control samples that haven't been samples that aren't suitable for RCA because they're fractured or have some other issue with them, and the unadulterated ones, which will be going through the porosity permeability measurements very shortly. And then from a source rock perspective, again, the concern was there's source rock present, but what's the lateral continuity of it and the quality of it across the basin? And we've seen a huge amount of source rock, and again, that's now very, very low on our concerns list. So going in, Mukuyu 1 basin opening well has now proven up a working hydrocarbon system and taken a lot of the geological risk off of the table for us. So a very good result from that respect. So going into Mukuyu 2, what we're looking at from an appraisal well perspective is this is a top structure map for the Upper Angwa. This is this major east-west fault that runs through here, and this is where we drilled Mukuyu 1. And for Mukuyu 2, we're looking to stick on the southern flank and step out anywhere between 2 and 6 kilometers. So it's quite a substantial step out. It's not a it's not a redrill of Mukuyu 1 by any stretch. This is quite an aggressive step out, considering this was the second well going into the basin. But we're going to drill it on the southern flank in a more up-dip location, and this well will be more vertical. So another aspect of making this next program simpler. We know what horizons to concentrate on. That's the post dandy, which we had a tease, and I think we were a little bit too close to this east-west fault, and we had to make some compromises with trying to thread the needle with 7 targets, and we still see a lot of potential in that post dandy structure. So we'll probably end up drilling the post dandy on the other side of this fault and going vertically onto the side of the fault in the lower formations. The Pebbly arcos, as I mentioned, and the Upper Angwa, and then we'll also be looking at testing the deeper potential in the Upper Angwa, which was thicker than prognosed pre-drill, and then into the Lower Angwa as well, where you've got massive sandstones through there and higher net to gross units. So Mukuyu 2, the primary objective really is to prove a discovery in Mukuyu and appraise the structure in an up-dip location. We'll be gathering, again, a comprehensive data suite, enabling us to characterize the reservoir as well as the fluid. So obtaining fluid samples, ensuring that we can declare a discovery is our primary objective for this well. As a backup plan and a plan B, and on success, we are talking about a fluid capture perspective. We'll be suspending this well for testing so that we can, even if we're let down again on the wireline sampling, we'll be able to flow the well and recover a fluid sample at surface. And so that will then also be used from a well test perspective, putting my old technical hat back on to look at the well deliverability and assess the reservoir connectivity. Okay, we'll run through this results comparison with where we see the Cabora Bassa Basin unfolding and looking down the road at how this could play out by using the Lokacha Basin, which has been successful in Kenya, and how that played out and unfolded. So the Lokacha was first explored by Shell in the late 80s to early 90s. The basin opening well, Loparot 1, was drilled in 1992, but that was the second well drilled. The first one, Elie Springs, drilled by Shell, was dry. But Loparot 1, which proved a working hydrocarbon system, good quality mature source rock and reservoir, and but because of the oil price environment at the time and probably thinner pay zones than was anticipated, Shell relinquished the block and deemed it non-commercial. So Africa Oil then acquired the acreage via their acquisition of Turkana Energy in 2008, and then farmed down 50% of that to Tullow in 2010. Tullow then became the operator through that, and that was because of their experience in Uganda, which they'd successfully explored and appraised by that stage. In Ngamia 1, the play opening discovery was drilled in 2002 on 2D data, and from there, the story unfolded with an 88% success rate and 800 million barrels discovered from 10 fields. From a Cabora Bassa perspective, the history of Mobil exploring at a very similar time. All the majors were out on the continent doing the same thing. They relinquished it in 94 because they thought it was non-commercial due to the perceived gas risk versus oil. I think probably one of the other things I haven't touched on was the potential, or more than potential, for oil in this basin. There has been some generated, and part of our basin modeler's job is to find out where that's migrated to, because we have seen that strong fluorescence in the cuttings and also the sidewall cores. So we've got very liquids-rich gas and probably some oil around in the basin too. So we farmed into the acreage in 2018. Mukuyu 1, the basin opener, drilled in 2022. And again, we've proved up good quality mature source rock reservoir and established a working petroleum system. Mukuyu 2 coming up in third quarter 23. And we've got a huge amount of potential in the basin, 5.5 billion boes from multiple prospects and drill-ready prospects and some leads. So the two plays that were present in the Lokacha Basin, the first one was the Rift Flank, and this is where the Loparot 1 well was drilled. The difference in the basin center in the Lokacha is there was no big structures. So in the Cabora Bassa, we've got these big four-way structures that trend along the basement high through here. And then the other play is this string of pearls that you can see along the basin bounding fault through here. So the Rift Flank play was proven up by the Loparot 1 well. That was then subsequently followed up by Tuco and Iwoy. But Tullow and Africa Oil ended up focusing on the string of pearls because they were just simply bigger traps. Both successful, but they've got some still undrilled prospects and leads up through here. From a Cabora Bassa perspective, Mukuyu 1's through here, and then we've got a little saddle in the middle of the displacement trend, and then as it comes up back up towards the surface here, we'll be maturing these through the CB23 survey. Then looking at the basin margin comparison, again 3- and 4-way dip closures up against the basin bounding fault, and that Ngamia 1 discovery, which was over here, led to a further 6 fields that were discovered. So when we're looking at our basin margin play, we've got 5 drill-ready prospects that we've got mapped from the existing seismic, another few to be matured with the upcoming seismic, and success in those will unlock a huge amount of running room for this play. So just looking at a different way of viewing that and how it ultimately played out, Loparot 1, the basin opener, which was deemed non-commercial at the time due to a number of factors, proved a working petroleum system in the basin. Tullow and Africa Oil then focused on the 2 play types. Firstly, Ngamia 1 on the basin margin, which led to a multitude of discoveries along that basin margin play, and then Iwoy 1 in the Rift Flank play. In the Cabora Bassa, Mukuyu 1, successful basin opener, established a working petroleum system. We're looking at Mukuyu 2 to prove up the central fairway play, which then opens up Mahogany, Macabel, and all of these other leads that will be maturing into prospects. And then similarly from a basin margin play, whichever well we end up deciding will be the play opening test for that basin margin play will again lead to a lot of running room and unlocking these further prospects and leads. So tremendously exciting to have 2 options in terms of play types that we can, and we haven't talked about stratigraphic and other play types yet. These are just the two main structural plays that we're looking at. So it does, give us a lot of bites at the cherry, many options in terms of how we attack this, and when it works, it is prolific, and we've seen that in the results from the locker chart. So the way that this unfolded again was similar kind of value step, where first farm out stage, where Africa Oil farmed out to Tullow for roughly $37 million. That got them some seismic and a well carry, and then once the basin opener and the play openers were successful, then that unlocked all of these further discoveries over the subsequent years, and then Africa Oil were able to farm out a 25% interest in the project for $907 million if you include the development carry. So a value uplift of about 25 times. So we'll come to that sort of risk reward equation in a little bit. So we're going to attack this in a very similar manner, be quite strategic in how we approach it, and look to get up that value curve and really have that huge accretive leap on success. So the forward strategy, we've got a lot of news flow to come. So from a corporate perspective, we've got the production sharing agreement with government, and then we have that interest from other companies now that we have had good results on Mukuyu 1 that has de-risked the petroleum system substantially. So for a lot of companies, they liked it, but the risk profile for them pre-drill was a little bit too high. Now that's been reduced substantially, and it's a different proposition. Having control of the basin and all of the running room now puts us in a very, very good position. So we've got a tendering process for the services and long leads for Mukuyu 2. That's ongoing at the moment. So looking at the major services that we need to get right, wireline and measuring well drilling and directional drilling. Those are out at the moment. The way that we're maintaining the schedule, given the tight services sector is keeping some of the minor services. That's all sitting at our yard at the moment, and that'll give us plenty of time to shake everything down and ensure that before it gets mobilized out to the rig, that everything's in good working order, and then have those major services that we need to get right, particularly wireline and NWD and directional drilling. Again, we've got control of the timing of that because the rig's on location at Mukuyu 1, and it's a short rig move to Mukuyu 2, and a lot more is in our control now for Mukuyu 2 than it was for Mukuyu 1, where we were scrambling to get everything there at the right time, not knowing the conditions we were going to encounter. So we're a lot happier now that we've got a much more informed drilling program, well designed, mud system, services, and what we're going to encounter ahead of us. We've got the 2D acquisition coming up for CB23 survey, and then we've got again, I think a lot of people are looking for the sidewall cuttings and the mud gas results as well, which will help us confirm what the fluid characteristics that we've encountered, gas condensate, how rich it is, gas compositions, the different isotopes, and how many charge intervals we've had, where the gases come from and migrated, which will help us, pick our next locations that we're going to explore and appraise from a basin perspective and in Mukuyu, and in the sidewall cores looking at reservoir quality, really, and then also again helping us determine the fluid composition that we're going to need from a drilling fluid perspective to ensure that we don't or minimize, I should say, the drilling challenges that we had with sticky hole conditions and losses, etc. So looking to spud in Q3, and that's not far away. We're at the end of Q1 at the moment, so beginning of Q3 is not very far away. So everyone's getting ready, and we're in that lead up now already for Mukuyu 2, and then the results are probably sometime in late Q3. The 2D program, I've touched on this briefly. We're looking to infill through here, where We've got these existing mobile lines. You can see the spacing of our previous survey through there. So we'll be looking to mature some of these pretty large leads that we've got through here. This is an example here, Macmillan, lead D over here, and that's where it is on this screen. And we've got this beautiful flat spot that we see. And the seismic attribute work is also ongoing at the moment, and we're starting to pull out some clear trends of where the gas sands are from the seismic, and again, that's going to help inform us where we explore and appraise and where we focus on in terms of locations. And this is a flat spot that coincides over a 10-kilometer distance. So, and Macmillan is one of the smaller ones through here. So we really like this play, and that's why we've decided to mature this with some additional seismic. A little bit about our carbon offset project. I won't dwell on this too much because I'm going to do a dedicated session on this. This is a really exciting project, and I think it's going to be something that is going to be a huge value add to our business. None of this is reflected in our value as a company at the moment, but that will change very, very soon. And there's a couple of things bubbling in the background. Firstly, from just what's going on in the space, and then also we're looking to expand this project quite substantially, which will really change the scale of what we're doing. So Ngama Gwan Sukumi project, NGS Red Plus, is a carbon offset project to avoid deforestation of indigenous forests that sequesters carbon dioxide. This has had a pilot project completed by the World Bank. It's more advanced than most of these projects that you typically see at a similar phase. We've got a 30-year term as the Forestry Commission as our partners, and this will generate in excess of 30 million credits over its 30-year lifespan, and a very strong pricing outlook in the carbon credit market. As we get towards 2030, where a lot of companies are looking at fulfilling their net zero pledges, they're going to have to go into the market and buy carbon offsets. So we're looking at a price of anywhere between $50 to $100 in 2030, and going out to 2050 when there are more aggressive pledges, $150, $200, $300, some estimates. So this will become a very, very large business in its own right. So at the moment, we're going through the registration and accreditation process with Vera. We've set this up as a separate business, Miombo Forest Carbon Investments, which will hold the credits and develop the project, and that will allow us at a future date to spin this project out as a separate entity. We realize that not everyone wants to invest in a green carbon offset company that has oil and gas links, so we've deliberately structured it in this manner so that we can ultimately spin it off but still retain exposure as Invictus to this new fantastic business that we'll have. So I'll leave that there, and just really come to the wrap up, where Mukuyu 1 has been a great start for Invictus and for the Kapora Bassa Basin. It's proven a working hydrocarbon system. That's been the very first step in knowing whether we have a working petroleum system or not in the basin, and whether we have been wasting our time or not. So we now know we've got a real project on our hands. We've got all of those elements that are present, and now it's about taking what we know about the rocks that work and adjusting the operational parameters for drilling and logging, and making sure that we can deliver a discovery out of Mukuyu 2, and taking the learnings from Mukuyu 1 and ensuring that that we minimize any of the often challenges we've had. As I mentioned, similar thing happened with Maitea with the Silesia 3 discovery well. Same thing with Ngama. They were, it was hard work, and this is part and parcel of opening up a new basin. You don't know what you're dealing with until you encounter it. But we're much better informed now for Mukuyu 2. We've got a great carbon neutral now part of our business, which is going to become very large in its own right. That has no value reflected in it at the moment, but as I said, that's soon to change. From a markets perspective, we've got the ability to monetize large gas in Zimbabwe and in the rest of the region, crying out for energy, both in the form of gas molecules, but also electrons in the form of electricity. And we've got multiple ways that we can monetize that through the grids, through small scale LNG, with pipeline infrastructure in the region. We're not concerned about finding gas. I think any amount of gas that we find we'll be able to monetize. And that's something that's often overlooked. Government's been very supportive in providing a good environment for us, and we've managed to take this from acquisition in 2018 to shooting infill seismic to drilling oil in 4 years, which is an incredible achievement compared to most frontier jurisdictions. We've had two great additions to our board with John Bentley and Robin Sutherland, who are hugely experienced, veterans of the African oil scene. And we're very lucky to have them now on our team and guiding us through the next phase. We're a low-cost onshore business. We're not drilling deep water, expensive wells. We've got the add benefit now. We've got a rig in the basin. We've got services nearly ready to go, and now Mukuyu 2 on the horizon. Our infill seismic survey that's coming up will mature additional leads in a proven play, a long trend from Mukuyu. From a valuation perspective, looking at where we are compared to some of our peers, we're lagging compared to the results we've had. And then we've got a number of catalysts ahead of us. I think probably the most significant one that everyone is looking forward to is the Mukuyu 2 well, and that'll be commencing very shortly, just around the corner in Q3 of this year. So there are a couple of extra slides in here. These have all been dealt with in previous webinars. I think probably the last one that I'm going to touch on before we go to the Q&A really is what a success case looks like. And this is just a snapshot of some of the transactions that have been undertaken off the back of frontier exploration success in Africa, and looking at some of the big offshore gas discoveries in Mozambique, oil discoveries and gas discoveries in Senegal and Mauritania, and then gas in Egypt. The implied valuation on a working interest percentage point, once you unlock a basin, the lowest one here, which is done right at the bottom of the cycle where ConocoPhillips were cutting and running from Senegal, was $12 million per working interest percentage point. If you take the reserves on a 2P basis for Senegal, depending on which numbers you take, is anywhere between 300 and 400 million barrels. So looking at the size of what we're chasing, even if you use this as a floor price, it still provides us with an enormous amount of upside on success, even at these very, very low transaction metrics. So, we're trading at less than $1 million per working interest point at the moment. So success in Mukuyu 2 will deliver a huge amount of upside for us. And then we've still got the rest of the running room in the basin to unlock and control of it. These are really basins apart from Africa and Kenya, which is the entire Lokacha, have been taken on this is a license interest rather than an entire basin. So a lot of blue sky ahead of us once we get this right. And we're looking forward to getting after Mukuyu 2 and delivering what everyone's looking for, and a discovery which will be transformative not only for the company but for the country and the energy situation in the region too. So on that note, I'll get on to the Q&A, and these are some of the submitted questions that we've had already. Firstly, on sort of where we sit in terms of share price, questions on capital raise and overhang, and I think, look, certainly I think we've had a reaction where it's been treated as geological failure rather than an operational issue, which can be remedied. If the rocks don't work, we would be wasting our time. We wouldn't be going back, but that's not the case. But I think there is that uncertainty on the funding side of things and requiring capital. But once that's put to bed, and as I said, we've got a dual strategy. We've got interest from other players that's come in, and so we've got the ability. Again, we've done all the hard work. Do we sol risk this again and retain all the upside, or do we have a strategic farm down to another company that can come in and do some of the provides the capital that we need for Mukuyu 2? So again, those options are being considered, and we're always going to choose what we believe is going to be the most value accretive route for shareholders. And I think we demonstrated that with how we went into the first drilling campaign. Service providers, any delays to the tendering process due to the lack of current availability in the industry, and the second part of the question, we've been let down, has cost us hundreds of millions of dollars. I agree with that statement. Is there any avenue of the recourse fees we paid? I can't get into the commercial aspects of contracts, but this is, again, as I mentioned, common in the industry. I think what was more acute for us is because of the very binary nature of Invictus, because it is a single asset company, and so the success versus the result that we got has resulted in quite a huge swing. So I think we would certainly be in the 60 cents to $1 range if we'd been able to get a sample, versus where we are in the low teens. And that is, it's been hard for me and for the company to deal with. It's been very, very disappointing, and I'm I share that disappointment with all our shareholders. Contractually, though, it's very difficult from a recourse of a service company. And as I said, it happens often in the industry. This industry is complicated. The drilling conditions are high pressure, high temperature. Failures happen, and it is competitive at the moment. So there's a lack of tools, there's a lack of personnel, and so the service sector is in a poor state at the moment, and it's something that we've just got to deal with. But mitigate that, as I said, the way we've approached this next campaign is to retain the minor services that we're performing by the end of the last well. That then gives us the ability to tender out for the big services, as I mentioned, wireline and MWD and directional drilling, which are the big ones that and the ones that cost the most money, and the ones that you need to really get right. So that ensures that we're not scrambling around for every single service line and product, and trying to, again, bring all of those services into the country, coordinate the timing of all of that, because it is very cutthroat at the moment. I mean, it's not just in Africa and for our project that companies are experiencing this. This is going on in Australia as well, where some service companies, you've had tools booked, you've got a contract, and they're not turning up because they've got a better offer for tools to go elsewhere, and they're quite happy to wear the liquidated damages charges because someone else is going to pick it up and pay it. So it's hard at the moment. There's no getting around that. But I think where we stand is that success in this basin opens up a long-term future for a services company, and we'll be drilling, multiple wells, and that is a very nice ticket to have as a service company. Long-term guaranteed work in a sector that's very, very cyclical. So we're managing that as best we can. The tenders are out at the moment, and we'll provide an update once that's been decided upon and sorted out. But we do have a backup plan in the event that we can't get alternate offers. The ETA of the core sample results, as I mentioned, the reservoir core plugs the cleaning has been finished, and they're getting prepared now for their routine core analysis. And then further to that, there'll be a subsample that will go for some other analysis, scale special core analysis, which will provide us with electrical measurements, saturation measurements, and a few other things. Part of the reason that it has taken so long, the isotubes, they're flammable, and there was a little bit of panic trying to get them out of the country. Not a lot of cargo operators. They've never dealt with something like this before, and so there was a reluctance of them taking it on. It requires a lot of signatures to get stuff moved out of the country. The cuttings, every single bag of cuttings, we took 5 sets of samples every 5 meters over 3,500 meters. So it's a lot of bags to inspect. In case and that's as a result of the sort of other minerals in the country which are portable, gold and diamonds, for example. So any samples that get exported on a basis for testing have to be inspected by the authorities and require 7 signatures, and it's a rigmarole. But that's all been done now, and it's on their way. On the options, is it legally possible to extend the July options? That's something I'll have to take on notice. It's not something that we've looked at. July is still a fair amount away, and a lot can happen between now and July. We may not need to extend them. They may come into the money, and then everyone will be smiling. So that's not something we've looked at yet, but I'll take it on notice and send you a reply. Please advise when the DFS will be released. I think DFSs are more for a mineral type exercise. From an oil and gas perspective, it's hard to release this sort of info because you have to get up to contingent resource stage. We're not there yet. But if you go and have a look at some of the research notes on our website, where some analysts have basically looked at done some modeling of what an NPV number and DFS type analysis from a conceptual development plan looks like, that should give you a rough idea of what the size of the prize and the potential payoff is. And some of the previous slides I showed of those transaction metrics show you what this could look like on success. Okay, so just onto some of the live Q&As. The finance legislation to support the PPSA has been passed. Yes, that has been passed. So that was passed in the finance bill at the end of last year. So all that's now left to do is execute the petroleum production sharing agreement. And we were in Zimbabwe earlier this month with the entire board to progress that. Okay, sidewall core samples I've covered. How soon will the 2D seismic be shot? There's a timeline in the presentation. The lower Angua and the decision to drill there, because we drilled Mukuyu 1 in a deviated manner, that meant the torque and drag was the limiting factor for the rig rather than the vertical depth it was able to achieve. We still got down to 3,900 meters and then ran out of drill pipe. The lower Angua is untested. It's a big, massive sandstone, which has a high net to gross proportion of it. And so that's something that we would like to test, because we still saw charge all the way through the upper Angua down to 3,900 meters. Every single reservoir that we went into had gas shows. And so we think, that's likely to continue given the prolific amount of source rock around and the multiple charge histories. How close is Mukuyu 2 to the crest of the upper Angua? So again, we've got some work to do from a seismic repicking. Our geophysicist and our subsurface team did a hell of a job with picking our horizons, and we came within, I think, 100 meters at most was within prognosis, which in an undrilled basin is amazing. I mean, you still get companies with wells all over the field that still can't get near that. So we've done a really good job on that front. But again, we've got now velocity data and the VSP from Mukuyu 1 that we're integrating back into the seismic, doing a little bit of reprocessing work, and once that's finalized, we'll pick the final target for Mukuyu 2. But it'll be pretty crystal in the upper Angua and up dip of Mukuyu 1. And then for the post Dandy, that is likely, if we drill a more vertical well, that's likely to be on the other side of the fault. Just if you have a look at our previous presentation, we drilled a deviated well down the backside of that fault to track it, and that just to hit it in a more crestal position. I think we got too close to the fault in the post Dandy, but on the other side, we're still going to be well within that bright amplitude, but be able to drill them well Mukuyu 2 more vertical than Mukuyu 1. So that's why it'll be probably on the other side of that fault block. But again, once we pick the final well location, we'll go through that. Would you ever convert the appraisal well into a production well? Yeah, I think definitely on success, it'll be potentially a an early pilot scheme or a long-term well test, which will provide us with a lot of great dynamic information and inform the ultimate field development plan. Something we did successfully with Wyatt's, which is been providing that kind of small scale. We can, and we don't have to flare the gas. We can put it straight into the grid, which is nice because it's not just being flared and being wasted and vented, but also provide us with really valuable dynamic data from the reservoir and determine minimum connected volumes, and we can see some boundaries from the fault blocks and a lot of other great information that as a reservoir engineer you just crave, but don't often get. And again, the advantage of being onshore versus offshore. Is the quality of the reservoir in a number of layers the biggest risk to McClure, i.e. the net to gross, given other factors of source, seal, trap, and maturity? Yeah, look, I'd say probably reservoir quality and continuity. We're talking about some of those intervals. We've got at least 11 in the upper Angua that we've logged, another 3 in the deeper section between 3600 and 3900, which we didn't get logs over because of the hull condition issues. So in a fluvial system that we're exploring at the moment, you're going to get varying quality in terms of the reservoir, and that's going to vary between your different horizons. So it'll be swings and roundabouts between, some of those horizons are going to be better than others, and those are the ones from a development perspective that you'll focus on. So, but I think it's good that we're not just chasing, one single reservoir section out of this. Well, we've got a lot to play with, and then we haven't mentioned the Pebbly Arcos, which is really shaping up to be something that's very interesting, just given the sheer gross packages that we're seeing in high net to gross within those kind of 50 to 70 meter amalgamated channels in the upper Pebbly Arcos, and we've seen fluorescence in it. That is very exciting. There's charge that's gone through there, and I think the drilling conditions and the losses that we took in there are indicative of the permeability. I think we've answered seismic, July options. Prospective volumes reworked with the drilling results. No, not yet, because we've still got some information to come through. What's holding up the PPSA? That's in its final stages now, and it's tidying up between ministries of finance and energy. So we went to see those ministries whilst we were in Zimbabwe, and now progressing that forward. That was going on in the background during the drilling campaign, but we had to sort of let it go and focus on on what was going on with the well, and we just simply didn't have the bandwidth to do it at the end of last year, and then at Christmas and getting ready for this next well. But that's that's now back and in focus, and we're looking to get that signed off as soon as we can. The reviews have been completed, and there's some just a few minor tidying up bits. We have no issues with the changes that have been suggested. It's not material from a guess an overall PSA perspective, and now we'll look to finalize that as soon as we can. Okay, I think I've covered basically everything. So there's probably one here that on the overbalance and the wellbore pressure. So look, it was substantially. So we drilled overbalanced, but when we took the formation pre-tests, they were below what the hydrostatic mud weight is. So we knew we had a valid pressure tests, because otherwise we would have, it would have been no seal, tight, or supercharged. So it is low if you work out what a normal hydrostatic gradient is at the Pebbly Arcos level, let's call it. If you look at where those fluorescence in those cores have come from, 2 2473, I think, was that number. We're a couple of 100 PSI above that. So potentially quite a substantial column that we're looking at in the Pebbly Arcos, and then a little bit higher than that in the upper Agua as well. So on that, thanks for everyone for your questions, your engagement, and your support. We've got a big few months ahead of us, and now looking to deliver on Mukuyu 2, and where that will leave us in a very, very where we should have been post Mukuyu 1. But look, something that I've had to come to terms with, and been very, very disappointed with. But we're looking ahead now to Mukuyu 2 and being able to deliver a result now, that everyone's looking for. And we've done that, took the risk with Mukuyu 1. It validated our geological modeling. Our subsurface team did a fantastic job. There's not many people putting their companies and reputations on the line, drilling wildcat wells in frontier basins. And for us, we've proven now that there's a working hydrocarbon system. It opens up the running room in the basin. That is the first step. Go back and look at how these other basins have followed similar paths, whether it's the Perth Basin and the King Ear play that's now been prolific across there, whether it's the Lokacha, whether it's Guyana, Uganda. All the basins start out like this, but we've got the control of it, we've got the running room, and we should be in a much different position post Mukuyu 2, and then we've got a huge amount ahead of us then, and a huge amount of upside and value creation that, as I mentioned, will be transformational not only for the company, for the country, and for the energy dynamics in the region. So with that, thank you very much. And if there's any further questions, please feel free to email. And also a lot of people have got my number and ring up from time to time. Always happy to chat to our shareholders and get their views and opinions and answer their questions. So thanks again. Take care. Bye.